Hey, what's up guys? John here. Brian Armstrong, CEO of Coinbase, just issued a warning letting everyone know that if Coinbase goes bankrupt, that you could lose your crypto. They just reported a net loss of over $430 million. Meanwhile, Brian Armstrong, just about 6 months ago, purchased a $133 million mansion in Bel Air. A beautiful, beautiful estate. So he's protecting his money. The question is the general public going to protect their own and take their money off of Coinbase and put it into a cold storage wallet? Here's what's going on. Coinbase warns customers they may lose crypto if the company goes bankrupt. This came out 10 minutes ago. Coinbase spooked customers with an admission that their crypto holdings could be at risk if the company goes bankrupt, a warning that surfaced alongside a dismal earnings report that crushed the cryptocurrency's hub stock on Wednesday. Shares plunged more than 27% Wednesday after Coinbase detailed the risk for the first time in an SEC filing, prompting a panicked response that led the company's boss to address the situation on Twitter. Because custodial held crypto assets may be considered to be property of the bankruptcy estate in the event of a bankruptcy, the crypto asset we hold in custody on behalf of our customers could be subject to bankruptcy proceedings, and such customers could be treated as our general unsecured creditors. The unsecured creditors, Coinbase customers, would be left without recourse to recover their cryptocurrencies or equivalent cash balances if the company went bankrupt. Coinbase said it held $256 billion in traditional currencies and cryptocurrencies on behalf of its customers through the end of March. Armstrong downplayed concerns about Coinbase's disclosure in a series of tweets on Tuesday, telling customers that their funds are safe despite the warning. We have no risk of bankruptcy. However, we included a new risk factor based on an SEC requirement called the SAB 121, which is a newly required disclosure of public companies that hold crypto assets for third parties, Armstrong said. Last month, the SEC issued new guidance instructing crypto platforms such as Coinbase to begin including customers' crypto holdings as assets and liabilities on the company's balance sheet. In the past, crypto platforms would leave customer assets off of their reports, mirroring the practices followed by publicly traded brokerages. The SEC said the updated guidance was necessary due to the legal uncertainties in the most unregulated crypto sector. Meanwhile, Coinbase's first quarter revenue fell far short of Wall Street's expectations. The firm posted a loss of $430 million during the period and noted a decline in trading volume. The plunge in Coinbase's share price occurred alongside a steep drop in the value of Bitcoin and other leading cryptocurrencies. The price of Bitcoin sank more than 3% to $29,978 as of 2/25 today. The latest downturn marked the first time Bitcoin has fallen short of the 30,000 threshold since July 2021. Ether was down 7% to $2,203. Solana was also down 25% to $52. So we're seeing a very, very big pullback. I think what is smart for everybody right now is to take custodial ownership of your cryptocurrencies. Do not trust an exchange. Take everything in your own possession. That's my take on all this. What is your take? Drop below. Let's talk about it. Hit the like button. Subscribe here. Sub also on my second YouTube channel. It's going to be a podcast coming very soon. And LinkedIn, Instagram, Twitter, TikTok, everything's in the banner. Catch you guys later.